Good morning, happy Thursday. My name is Mark D. This is the Euro Trade, and this is going to be the final schedule for this time slot. And then we'll be moving to the new schedule next week. You will be notified promptly, and I'm going to post it on my socials as well to let everybody know. All right, let's have a look at what we have today. I am still working on some of my algorithms, so something that I'm trying to do today is to combine about 3 different strategies on copper and on gold. But before we get into that, why don't we have a look at the levels and how Asia has traded, because that is always where I start my day. So on gold, I already have some lines that I placed. So Asia high was 36.87.6. Asia low was 36.60.6. Low 6 is there. I had the COMEX value low at 36.79.6 and then value high at 36.89.9. Let's say 36.90. We're still nowhere near the quantitative extremes for the day. So we now have the ADR high up at 37.02.6, and then ADR low is all the way down at 36.41. Now, I went back to see what is happening with the value areas, and they are actually overlapping for the last 3 days. That can be a sign of something called the bracketing market. It's effectively a consolidation. So when you have distribution curves that start to overlap, it effectively means that the price has not really moved to any new levels for 3 days. That can be a sign of a reversal. And in gold's case, it could be a sign of just a new range getting established for now over the previous 3 days, right? So something to note that maybe focusing on the extremes of the intraday part of things, so that we don't get any positions in the middle of the swings. That's never a good thing. We should not be diddling in the middle, as we like to say. And we want to make sure that our trade locations and chart locations are pretty strong. So yeah, right now I don't have any particular outlook, so I'm keeping my mind open to either side, and we'll see how this day can develop. Another thing is that we do have CPI later on. That could be something that affects gold and copper as well. So we're going to have a look at copper. We can have a look at silver and platinum as well. So let me just have a look at the options. Okay, options chain gamma wall is still sitting up at 3700. That has not changed. The GEX levels have sort of rearranged a little bit. And we also had a put support from the end of day yesterday at 36.80. That's also the same. And yeah, so we'll see whether some setups occur around the Asia low in particular, because that is the closest level, and how the price is going to behave around it. Omar says, can you look at silver? Yeah, let's have a look at silver. And because we haven't looked at silver much recently, let's start with a bird's eye view. Weekly chart, pretty bullish. No need to complicate that. Weekly chart looking kind of similar to gold with less of a consolidation, because I do think that silver looks more bullish than gold, strangely. On the daily chart, we also have some consolidation, right? So look at that. It's very flat. It kind of looks like little soldiers sort of saluting, right? Like, hello, hello, hello. Yes. But yeah, not much movement on the daily chart. We just started September, so we had this run up, and then as we hit September, we are consolidating. Does that mean we found the top? Because consolidation after a run up brings a reversal. Remains to be seen. But for now, I would again stick to the edges of this range for really, really good kind of intraday swing locations, and anything in the middle can be more scalpy, as long as you don't do 100 trades per day, right? Let's go down to the 4-hour chart. This is just the basic market structure. This is how I always start things. So large time frames are having a look at whether we have any obvious reversal patterns, whether it's consolidating, whether it's trending, just to get that big time frame context. And then we start to kind of drill into these lower time frames. And yes, 4 hour for me would be more of an intraday time frame, where you can definitely find ways to position yourself in many different ways with some slightly fancier tools. But we're definitely building volume here. Let me just bring up the silver chart on my other main charting tool, where we have a whole bunch of data. Okay. When it comes to the London session, sort of value areas and readout on silver, we're opening inside value, trying to push outside of it. Right now, initial balance is not extending either side on silver. So kind of looks not too dissimilar from gold, to be honest. And it's going into a bit of a consolidation as well. So let's just mark up some levels. And for silver, because I think it moves more during London, just looking at the ranges and stuff. Let's mark up the value areas for... Actually, let me ask you guys. Do you want me to give you COMEX values that will be relevant for COMEX rather than now? Because that's something to consider. You know, metals are great for 11 o'clock onwards, but not so much now. Paul H says, I noticed settlement was the same for the last 2 days, not seen that often. Yeah, so whenever settlement prices also start to overlap, you always have to think, is this a range? Is this a range? So yeah, do you guys want me to give you London values, or do you want me to give you COMEX specific values? Let me know, and then we can crack on. And then we'll also have a look at copper, because I think copper is going to be pretty important today for the CPI release. Just going to kick off something here. Now, what I'm doing some tinkering on the other side, so it might kick me out of my platform. Well, Paul H. So, Paul, most people will be awake for and trading actively COMEX, right? That's why, you know, I trade earlier, obviously, so I have to look at the LME open and how that relates to the levels of my time frame, right? But if somebody comes to trade COMEX, well, then you're looking really at COMEX values. It depends really on, like for example, if you were trading Tokyo, you wouldn't necessarily be looking at London values if you're active now, right? But you would be looking at Tokyo values, like what's the Asia range, what, where are we opening in relation to previous days, Tokyo session. So yeah, it really does depend when you're looking for a setup. So if I'm looking for setups during LME, sort of first 30 to 60 minutes, I might be able to find a nice trade there. But if I'm only looking at COMEX, let's say I didn't manage to find the LME open setup, I then have to look at things like failed auctions and, tests of value and mean reversions, because COMEX is the next sort of major opening session with quite a bit of volume. So, but for the new time slot that we're going to have from next week, obviously that's going to be LME, so I'm going to be looking at LME. But right now I'm not looking for any setups in particular. Okay, Shay wants COMEX. COMEX, so does M Stone. All right, let's do COMEX. Change that. Okay, COMEX value low, 41,547. To be super exact. Five, 4, 7. Let's say 545 because it's 5 points. So I'm gonna mark that as COMEX val and change it to my purple color. Oh, that's a text. So okay, that should be yellow still. Then we have value high, which is 41.70. Similar to gold, we do have some overlapping values, but they're not as uniform on silver, bizarrely, as they are on gold. But definitely overlap over multiple days, actually, 4, 5, 6, which makes sense because, if you look at it on the daily, it's pretty flat. Let's have a look at the session extremes. 42.125 is the average daily range high. There we go. Then we have 40.940. Change that to lime. Now, what are the options doing? Let's have a look. Because I actually haven't looked at what it is they're doing for a while on silver. Right, technically we're sitting below this HVL, which might mean we're in a gamma negative environment. But I'm just going to cross-check that, what happened yesterday. So some levels of interest. Put support from yesterday was right at 41.50. Right at 41.50 through this little consolidating 30-minute pattern. So right there. How much space do we have till the lower next highest concentration of the open interest? Quite a bit of space actually, because GEX 4, it's not the strongest GEX level, but on the downside, that's the first available area where you might expect market makers to hedge. 41,250 is GEX4. Then we have the big GEX1 level. And again, depending on the environment that we're in, that could be supportive, but it also could smash through it. Scholar is asking, do you trade ES as well? I'm not really an equities trader. If I trade any equities, it would be DAX. We don't have DAX. And if I trade ES or NQ or YM, actually, that would be for power hour. So not until my 7 p.m. And just for reference, right now it's 9:50 a.m. in the morning. So no, I'm not really an equities trader. The whole point of my shows is always to expose you to some of the more alternative markets, because I have been a commodities trader in the prop world since 2013, but I've actually already traded for 5 years before I even went into professional prop trading. And I've really never considered myself to be an equities trader. I was always crude oil, gold, silver here and there, but crude oil and gold were my main two for 12 years. So yeah. And obviously copper is something that I've been doing for the last couple of years pretty religiously. Platinum here and there. Again, platinum is more seasonal depending on the deliveries, delivery requirements. So sometimes it's like super quiet and nothing's really happening, and it's just not worth trading it during that time. I trade natural gas intermittently quite a bit. So yeah, so I'm more energies and commodities. I think we have enough ES and NQ traders on YouTube, and I just feel that some of us are maybe looking for other products that are not so sensitive to or any and every release that you can think of. So to give you an example, ES and NQ will react to everything. We're talking Michigan consumer sentiment. We're talking beige book, red book, blue book, purple book. Like, it literally can be affected by any single piece of news. That's annoying to me as a commodities trader, because in commodities, especially in something like crude oil, natural gas, heating oil, RBOB, which is gasoline futures, you really only have to worry about a couple of things: the inventories, and some rate decisions. That's it. It just doesn't really react to anything else. So it kind of makes your workflow a lot better when you know that not every day you have to be like sitting on pins and needles, like, oh my God, how is it going to react? It's like you can just relax and trade, and keep in mind the inventories on Wednesdays for crude oil and inventories on natural gas on Thursdays. That's it, right? And then once every 2 months, you have to pay attention to FOMC rate decision, because that can affect it. Gold is a little bit more sensitive, so I do try to trade gold outside of the releases rather than trading into them. If it's a minor release that generally can bring some movement, but it won't be like a complete algo battlefront, then I may just run a trade through it. If, like, let's say I found a trade during the LME, and then I'm kind of just deciding to hold that through. Not very often, but it has to be something like jobless claims or something. Like, gold can react to it, but whatever setup I usually have, it very rarely completely reverses it, And that's why once you go trading commodities, I don't think you ever go back to equities, because you realize that there's so many more opportunities, because they're less one-sided. In fact, a lot of the commodities, once you figure out how to use them properly, how to trade them properly, they become products that are very structured and super time dependent and technical, and all of that in my brain that likes order in general, even though on paper you wouldn't think that, because I used to be a session musician professionally, again, for 20 years before then, before I even went into trading. It's very liberating knowing that if you missed one move, you're going to get at least 2 other opportunities, and you don't have to stress out. So there's that. So yeah, equities are not really a big deal for me. All right, so let's see. We have GEX1 all the way down. What was I doing? Oh, yeah, I was trying to see whether we have positive or negative environment. So let's have a look. Silver, silver, silver. Silver, silver, silver. Let me find it. There it is. It's a positive gamma environment. Okay. Lower volatility. Good range. Good range for lower volatility. And we have decent momentum, obviously, as a run-up prior to this consolidation. But yeah, so what does that mean? Positive gamma. What is that? It means that any sort of rally or a sell-off is likely to be stabilized by market makers who are looking to remain neutral in their overall exposure. Does that make sense? I'm trying to simplify it so that people don't get scared. So, because it's really quite a simple concept. You know, if you are, think of positive versus negative gamma environment as more rangy rather than more trendy. So when you have these levels that I'm mentioning, oh, GEX1, GEX2, GEX3, when you have a positive gamma, it is more likely that that level will basically be the stopping point. Now, things get a little bit trickier if you have all of these important levels bunched up very close together. I don't like to see that, actually. So sometimes I open up a gold chart, it's like GEX1, GEX2, GEX3, GEX5, like all within like a 5-point range. That usually means I'm not going to have a good read on it. So I will be extra careful not to run stupid trades. And in most occasions, I will look for the price is going to try and move away from it. And then I use other references to see maybe I can fade it. But yeah, those kind of days get tricky. But when you have a space between these stabilizer levels, it's very likely that whatever the price does, like let's see where the next GEX level to the upside is. So we have GEX2 all the way up, it's 41.75. Now that's definitely a stabilizer level. So if we have a big run up, and it's not being driven by any particular catalyst that can make everything go absolutely crazy and therefore change the gamma environment intraday, because that can happen. Anything can happen, right? It's trading. Like there's endless opportunities and things that can actually put a wrench in the works in your plan. But generally, if you're looking at it from just the beginning of your plan, how do we expect the prices to behave? Well, we would expect the put support that is now at 41.50 to be reasonably reactive. What is the trend that we have right now? Well, right now we're consolidating, but the trend was up until here. Where are we in relation to the open? Well, really, we have opened inside value. So that also kind of speaks more to range-bound conditions. But let's say that we use trend for direction and this put support. So I would be looking for a rotation through the value area to the upside with the trend, and then quite possibly pushing all the way to that GEX2 level, where I would expect the prices to be stabilized due to market maker hedging activities. Okay, why? Because we're in a positive gamma, and that means that any sort of a rally is going to be hedged by the market makers to make sure that their risk and exposure doesn't go too off the mark. So to me, it's very logical. It's like, yeah, of course they're going to do that. It's like you can't let it go all the way. Now, here's the thing. When you have negative gamma, you actually expect the prices to largely slice through the levels, because they will then act more as an accelerator, and the market maker hedging activities now turn into amplifying activities. So it's quite, it's quite, to me, very logical and, a very nice way to orient yourself on the day. Paul H says positive gamma means staying between GEX2 and 3. No, so positive gamma, if we're going to look at HVL as your indication whether you're positive or negative gamma, in theory, In theory, if you're above HVL, it would mean you're in positive gamma. If you're below it, it means you're negative gamma. It's not quite that simple, though. That part is a little bit tricky, okay? But the HVL is the one that is technically the breaking point of a flip between positive and negative gamma. However, a lot of the times, if you have an extended move up to HVL, it will actually also act as a stabilizer, and sometimes a very good reversal, actually, because, you know, they kind of touch that point and then they go, well, actually, we are going to go back where we came from. So we're going to hedge against this move and not actually go into the opposite gamma environment. So yeah, to me, HVL is another sort of level to look out for, but I'm not super obsessed with it unless it is also lining up with one of my other levels, if that makes sense. And I do that for nearly everything. So for example, if I look at the GEX2, 41.75 is where it is. Do I have anything up there? I have yesterday's high. So yesterday's high might be something that you want to shoot for if we end up in a long silver position, for example. Why? Because there's confluence there with the GEX2, which is expected to be a stabilizer. So yeah. All right. Hopefully that's a good enough overview on silver. Let's now have a look at copper, which is very likely to be super reactive today. We saw a nice move yesterday. I managed to catch 53 ticks after CPI. So I actually caught it once we started breaking through this old Asia high. These are levels from yesterday because I haven't done copper today. So as we broke through it, I was looking at whether we're going to get committed volumes. Yes, that was the case. And then we had, I think it was even a 15-minute time frame that closed above Asia high. Yeah, so closed above Asia high. I missed all of this, but then on the test of it, I saw that we're getting some passive buyers stepping in via this wick. Even though it's a red candle, the buying wick comprises more than 50% of the overall length of the candle. That's significant buying. That means that the selling and the reversal at the former Asia high has failed, just purely reading price action. Who's winning, who's losing. And the sellers definitely tried. So they tried to hedge it here. Who's they? The wizards. But generally, this is a sign of passive buying. So I thought, let's go into a breakout trade because, you know, PPI. So I managed to get all of this move. So I have a time-based profit target for trending moves. So basically, I just closed it. I think it was, yeah, Paul, when were you here? Because I ran that trade all the way through when you were here. And then when you left, I think it was 5:15 our time, somewhere around there. So I think I closed it literally just after LME close, which is 5 o'clock over here. So yeah, it was very drama-free move, right? Not the biggest one, only 53 ticks, but yeah. Rigoberto says, what has the most volatility for the London session? DAX, but we don't have Eurex products yet. And no, I do not know when they're coming. Ask MP. Yeah, all right, so let's have a look at the new levels in copper, shall we? First things first, Asia high, Asia low. Where did we open? Where is it? It's here. Okay, so that was the Globex open. That's the low. Let me grab my old levels and drag them, kicking and screaming. Okay, Asia low, Asia high. Now, for the LME, if we go further than these points, then that becomes the overnight low, overnight high. It's still, you know, out of hours, so to speak. But if, let's say, we push a little bit higher, that becomes an interesting overnight high, the new overnight high. But for this time of day, what we have right now, the Asia high, Asia low range, or overnight high, overnight low range, that's where we're sitting, right? So that's step one. Step two is to look for the value area for COMEX, because most of you will be trading COMEX. So let me just find that chart. By the way, I've decided to go silver. So I'm growing up my hair, so I'm going to look very weird for a while. Because I think I'm reacting to like a hair dye or something, and I just can't be doing that anymore. And, you know, I'm turning 45 in 2-3 months, so I hear that the ghost roots is a thing now, so that's what I'm gonna be doing. You know, Billie Eilish, like she's got those lime roots, but a lot of people are doing them with like white and silver, and it looks like they're growing out grays, but they're not, because they don't have any grays because they're so young. I have grays, so I decided to grow them out because I think it's gonna look cool. One time I went like gray hair, and I think it looked all right. But I do think that the natural gray has a certain pattern to it. And since I look relatively young for my age, I think I can get away with it. I don't know. We'll see. If I hate it, I can always just dye it back, right? Pop an allergy pill and dye my hair. What am I looking for? I'm looking for the COMEX chart. And that is not it. Okay, wait. Let me locate the COMEX. Is it? This might be it. This is it. Okay, found it. I found it, guys. Yay. Big round of applause for Dee doing something this early in the morning. That's correct. Okay, inside value still for COMEX. Value low, very close. So it's undecided where we're actually going to open for COMEX. But value low on copper is 460.60, which is a very nice... A lot of sixes today. Like, what is going on? And COMEX high is up at 62, what is this, 62.30. So just outside of the Asia high, but still below yesterday's low. So COMEX, value high. Cedric wants to know, can you integrate automatically GEX level and TopstepX? No, there are no outside indicators, integration on TopstepX. You can only run APIs for order placements, order management, running data streams and stuff, but no, it does not allow you to use trading view indicators that are under the copyrighted use from TradingView, because it's PineScript, that's their language, so you can't easily use it as a white label platform. So maybe they come up with something. You know, they would need to probably create ways to draw lines and stuff, but you can do a lot of stuff outside of it through the API. I created a little trading dashboard, which is really pathetic because I'm terrible with creating anything visual. How is that connected? What? Am I running an algo somewhere? So this is what I made yesterday. So yeah. Is that really connected? Because it should... I just wonder whether I left something running. Because that's definitely connected. Like that's running a... a real-time stream. Gonna have to check my IDE. But yeah, so you know, you can create like HTML dashboards and stuff. You could, like, if you're very good with graphical user interface, and if you know how to use, you know, web pages and all that. I'm not particularly good at that. But you can actually create a candlestick chart. You can create a tick chart. You can create a whole bunch of stuff that that would be very nice to like track what's going on with your algorithms. But if you are anything like me, I don't really care much. Like with the algos, I know what I'm trying to achieve, so I just want to see whether it's doing the order management side. That's, you know, and whether it's entering when it's supposed to be entering. So I usually have something else like a charting platform where I'm looking for those setups, and I don't need everything to be in one platform, right? So I use, most of the time when prop firms decide to go changing platforms and stuff, I usually just go, yeah, okay, I'll use that as an execution platform, but I'm still going to maintain all of my tools that I'm very used to in my dedicated charting platform. And that used to be the thing back in the day. You didn't get and I spoke about this before, you didn't get a chart. You got a dome. So you just got this on the side. So you would open up your new platform for the funded account that you were just given, and it would just be the dome. So then you would have to pay an arm and a leg to get a charting package from CQG. And even that was like rather basic. If you wanted something extra, I remember at one point even T4 was charging $500 per month to subscribe to the market profile. And it wasn't a very good one. It was always in a different screen, and you couldn't overlay it over the candlesticks. It was all like, you know, so I had to like keep scanning. It was one of the big reasons why I went into creating the Blotic MP, the Blotic market profile that has a graphical overlay, right? So this is what mine looks like. You know this. So that's my main charting platform. I have everything that I need on there, and I use Topstep as execution. Doesn't have to be all on the same platform, you know? I think we're a bit spoiled these days. Rigoberto wants to know, does NQ have good volatility? I don't think so, because outside of Trump tariffs, NQ is a bit of a snooze fest at this time of the day. And usually as soon as, like, here's the problem with that approach. Unless you will cut off your time of day when you're planning to trade at New York Open, you have completely different ATR measures, completely different volatility, completely different setups. And on most days, it just doesn't move. So if you're used to NQ being NQ during New York, you are going to be very surprised at how meh it actually is out of hours. So just to give you an example of the kind of ranges, differences that we're talking about, Tokyo is still the quieter side of things. And right now, even though normally the initial balance size for New York is kind of between about 200 ticks to 250 ticks on NASDAQ, even though it can be pretty, it can overshoot massively. But typically 200 to 400 initial balance size. Right now, it's 117, which represents about an eighth of the range, actually less than that, ninth of the range of the overall day. So that means it's pretty quiet. And the volumes are so low that I can't even see them. I literally can't even see them. There's another caveat here. We are in rollover on equities, which means that the volume is now getting split between the September contract and the upcoming December contract. And that is always tricky for any kind of momentum type trades. Even if you have a dedicated trend, it's always push, pull, and then it goes into a trend. And then the next 30-minute candle, push, pull, tug of war. Then they sort of go into another new higher high or lower low, depending on the context. And it just continues to do this really annoying price action. If you look on Twitter, I see a lot of people were complaining about yesterday. Even though yesterday, technically, right, we went down. And technically, if you look at it from the profile point of view, it was just a mean reversion down to value on NQ and on ES. But I'm guessing people kept trying to buy the dip, even though we opened with a gap that is almost like perfect for mean reversions to value, 0.6% distance. So, you know. I don't think that NQ is very good. It livens up more towards the pre-market side. So again, when LME livens up, you also have a whole bunch of other things that start livening up. Natural gas starts waking up. Obviously, metals suddenly start to make a real decision of whether they're going to go into a trend or not. And eventually, you get the New York Open, and then everything goes nuts. But NQ, unfortunately, this is not its main session, right? This main session is New York. But the main session for DAX is this time of the day. Gold made a move. Gold made a move just now. But that's okay. I'm just going to see what's going on with my algos, because somehow, I'm running it. I don't know how or where. Let me check. This one. Is it this one? It could be this one. Is it this one? Yeah, I think it was cursor doing something here in the background. Okay, we're going to do that later, so I don't mess things up here. Yeah, with the CPI looming, oh, we have Asia low here, okay. With the CPI looming, we may get a bit of an unwinding move. But let's see what they want to do here on copper from the Asia low area. This is the old value high. I need to delete that so it doesn't confuse me. Where are the options levels? Let's have a look. GEX3 is all the way down at 458, so there's a lot of space before we get there. But we did have put support straight through this whole Asia range at 461, I think it was. Yeah, 461. And then again, a big gap to HVL, so we're technically below HVL. Let me just check the gamma environment. See, this is all a part of my plan, right? So I just go, I have these checklists, and even though it seems like I'm just pulling them out of my head and just going, oh, check this, check that. Make sure that you do know that I've done a very systematic intraday plan and was writing them day after day after day for like probably about 7 years. There was not a day that I didn't trade, well, that I traded without an actual written out plan. So once I've done that so many times, the steps that I've taken through the checklists have gotten burnt into my etched into my long-term memory. So now it's a routine and I don't really think about it. But back then it was definitely a struggle because I was like did I check this? Oh no, I didn't check that. Oh no, I forgot about the time of day. Oh God, what about the average session range? I didn't put that down either. So it's just so much easier with all the stuff that you need to take in. So all of it is just situational awareness. It's not, let's just look at the level and wing it, right? It's situational awareness. What do you have on large time frames? What do you have on intraday time frame? How are you behaving? All of that. Eric is asking, how did you get custom indicators on Topstep X? I didn't. What makes you think these are custom indicators? This is Fisher Transform at the bottom because, again, I'm tracking something that has a Fisher Transform component in it, and I quite like it for a filter, more than RSI. This one here is the volume. The one on the side is the volume profile visible range. And then the lines that I have are just manually drawn. You see me draw it. Indicator at the bottom, Trader X, Fisher Transform. I use it on the daily chart too. And I have my specific levels that are not what textbook says, because it's kind of like, oh, it's a trending indicator. But I actually realize, because it's tracking the Gaussian distribution, and once it gets to a certain level, it kind of acts like RSI, but better. Because during the trending move, it will actually correct itself. So if you have something like an equity index that keeps trending up and up and up and up, if it gets to 0, it is then potentially on the daily chart, not intraday, it then becomes a filter to look for more longs, to kind of go looking for buy the dip situation, rather than constantly trying to go against it. And in my algos, I do use that as a filter. So, do I have an equity? I think I have YM on my chart package. So for some reason, sometimes the combines that I have, because I have a live account, obviously, somehow get the data package from the live, and then they won't let me run ES or NQ. Maybe they will today. Okay, so maybe they fixed that, because that maybe was a bug. So if I look on the daily chart, why is Fisher Transform not showing? See, that's confusing to me. Why do I not have any data there? It's probably because they don't pay it. So there's still an issue with the packages there. I need to report that. And if I go NQ, sometimes when I try and do this, it won't even show me that there is a symbol there, even though technically in the combine we should have the full shebang, right? We should have the whole thing, but something somewhere is clashing. So let's go back to ES now. Yeah, so now it has it. So now it populated it. So for example, on the daily chart on ES, you have this nice trend. And when we had a little bit of a smash down here, everybody was screaming bearish, but here we are again at the all-time highs. So let's have a look at the Fisher Transform conditions, how to filter out the pullbacks. I have the 16 EMA here because that's an intraday measure that works better for me intraday. Not to be used on large time frames. You need to use 21, 50, 100 moving average. That would be more accurate. But to figure out the pullback time in a trending market, pullback of Fisher Transform to 0 indicates that that Gaussian curve is now ready to kind of continue whatever it was doing. In some of my other products that are a lot more double-sided, I have different measures, and I'm not going to tell you what they are because they're mine. They're mine. Why mine? Why mine? Why mine? So in this case, let's just look at the Fisher Transform for the textbook side of things, because it does work on trending markets. So daily chart, pullback, I don't think we had any meaningful level. Maybe there was like a range low here. But Fisher Transform goes back to 0 and then overshoots it slightly. But the very next day, the pullback starts. And then again, I have my Fisher Transform measures. you can see that it's creating another curve and it's going back. So for something like crude oil and RBOB and other things, I do have points that I want the swing to finish, but the swing should last longer. This is a trending market. It's a different situation. But let's have a look at what happens to when Fisher Transform pulls back to zero again. So here it is, only a few, maybe a 10 or 14 days later, pulls back to zero, and what happens? It fails to make a new lower low the next day. What happens next? We go into another trend. So over the years and years that I've been looking at different indicators, RSI, MACD, I threw all of that out because I don't think it's accurate enough because it doesn't have that correction. If you have RSI in a trending market, it goes into overbought and stays overbought. So it's like, well, what use is it for? Like, I can't short this. It's back at all-time highs. Like, I'm not crazy. So how about I try to find another indicator that has a better logic underneath? And I looked and looked and looked, and then Fisher Transform looked interesting just purely from what I read about it. And I said, let's see if I can make this work. And I did. So luckily we have it on Topstep as one of the normal indicators. Yeah. Shaky says, Dee, how long does price take to stabilize on contract rollovers? Until the rollover is done. So once all the volume, if you go to CME website and you look at the quotes and the volume, which I showed yesterday, or one of these days, one in the week, and you look at which contract has most volume, when the December contract exceeds the number of volume of the September contract, that is technically rollover done, right? But they have to roll until the last, is it the last Friday of the month? Bruno, remind me. So yeah, it takes a couple weeks, sometimes even 2-3 weeks. Yeah. 5 Pandas says, because I started watching you, I get many YouTube recommendations of gurus that trade gold, meaning a lot of your viewers are into these gurus and the algorithm thinks I might like them too. Well, to be fair, we don't really have too many people who are just providing value and actually teaching you ins and outs of strategies. So I don't think that most streamer YouTubers are pretty studious in that way. There are maybe a couple that I can think of, but a lot of them are just, they sit to live stream and then they kind of banter with the chat, and they're like, oh, I'm going long here, and you're gonna get a lot of ICT traders who are like, yeah, SMT. And silver bullet and PD and array and a whoop 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 and a whoop whoop whack with their with their super complicated explanations of what is going on that nobody else understands apart from them because it's their meta language, right? And they never really explain it. They're like, well, you get people who are not ICT asking them, so what is this? Well, what does the PD array mean? And they're like, oh, it's this thing when that happens, and then you have premium and discount, and blah, 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 and they never explain it. So I was like, okay, great. And then I lose, when I'm looking at those when I'm watching those kinds of streams, I glaze over, man. I can't, really can't handle it. Let's go back to copper for a second. But yeah, that's the Fisher Transform use. It's pretty good. And yeah, just something to consider. All right, so I stopped my algos in the background, so because it's too early for them anyways. I don't know why one of them was running in the back. Maybe I left it like last night to do some stuff in the background, because I was running a backtest sim, and that takes a while, and all of my backtests are like 6 months just to figure out whether that strategy has merit. And if it does, then I kind of work on optimizing it a little bit more, just not too much, just a little bit. Most of my algos have some sort of a scaling of stops in relation to volatility and all of that good stuff. But yeah, so now that I have the Asia low slight takeout. Maybe, just maybe, copper decides to go back. I didn't even open Bookmap because my machine is busy doing other things, so it's quite expensive. Maybe we can look at time and sales for that purpose. Even though at this time of day everything's pretty slow, so it's not going to be like, oh yeah, tape is doing this. Like you don't really have too much information on tape when everything is slow. It needs to be a lot more dynamic. But let's have a look. No filter. It's a thin market anyway, so. And let me go down to maybe a 3-minute chart. Do we have any buyers stepping in? So this was what I referred to as a volume exhaustion candle. It didn't go below Asia low. So technically this might be, like, I prefer to do this type of a setup when LME opens, because they have a much higher probability of working out. At this time of day, it might go lower, it might not. Like, it's a really kind of a coin flip, 50-50. But when it happens during LME 30 minutes, where the overnight low gets taken out and then it reverses, there is a lot more volume for this to play around with. And then you get a very committed decision. So let's try looking for these buyers, and then if I can get someone, but see how slow the tape is. See, it's like if you compare it to like NQ tape or something, this is snail pace, and it gets a little bit quicker when LME and COMEX start trading, but usually it's just like a meh. Okay, and let me just see how much of a stop would I need here. Oh, this is all very pathetic when it comes to ranges. I mean, 23 ticks for an initial balance. That is just bleh. Okay, just for chat, okay, tradertainment, we are on a sim here as well, just for chat. Again, not the right time of day for this, but for the tradertainment purposes, I'm gonna plop in a trade, because now I switched off my algos, so if they deem something is happening, I'm not going to clash with it, and this is not going to go into the stats for the algo, because the algo only looks at the trades that were done based on the actual strategy, and it has like its own ID and its own tag. So yeah, all in, full port, 15. Yeah, there's a big since we're talking YouTube gurus, even though I hate that word, there's a lot of them who are extremists on the combine and evals side. It's like, we pass in one day or nothing. And it's like, why can't we just, show consistency and spend 5 days passing a combine? But no, it's like, it's good viewership, I suppose. It's good TV, but it's not good. Like, I feel like a whole bunch of live streamers have now trained people that this is okay to do, that it's okay for you to be a complete degen in the combine, and then think that now you're going to suddenly, magically have the skills to do the very difficult task of staying self-aware and staying mentally present, knowing all of your mental triggers, sizing down, and not trading from dollars in your eyes point of view. Because, when you get into a funded account, your first goal is not to get a payout. Your first goal, primary objective of an XFA that was just freshly activated, is to keep it. And I don't know how that became somehow the non-relevant thing. It's like, gotta get to payout, gotta get to pay. It's like, you just passed a combine. So breathe, like, take a minute to just breathe. But I want the payout. I know you do. So I should have like some sort of a puppet where I'm like talking to it like a Muppet, and then me. I do have an animal. Do you remember Animal? It's not really a hand puppet, but it's just like a stuffed toy. I actually have it on my my little what do you call it? The little stove. Is it a stove? The wood burning stove. So it's got like a top. So right now Animal lives there. Maybe I should bring him out. But I don't know how the Muppets, like we might get in trouble for copyright or something if I'm using actual Muppets. That's why I use non-specific puppets to illustrate a point. Like Pete the process parrot, always with me, watching me from the right side, perched, and going, "Are you following your process there? Slow down. Dee and the Puppet Show." Yeah, so I don't know how people think doing all of the bad stuff. So it's like this. If you equate it to a diet, so how you behave when nobody's watching and when you think nobody's watching. And then you're stuffing pizzas down. You're like, you never let go of the crisps. And you are always losing your mind watching mindless TV shows. But then when people are watching, you're like, oh no, I go to the gym. No, I'm very careful with what I eat. So equate that with a trader who is doing a whole bunch of stupid things in a combine. And then they're given the chance to have an asset in XFA, something that can bring you money. So now you're suddenly going, oh, but now I need to eat well. And now I need to exercise. And now I need to size down and follow consistency rules and not lose myself because I really want to eat like crap. But I also want to look great. It's like, cool story, bro, right? So it's never going to work because you're not setting the discipline and the habits to be fit, to be healthy, to not eat crap when no one's watching, yeah? So yeah. Skylar says, do you want to review my stats this week? Yes, let's do it. Let's do it. So we have a trade running, right? It's a reversal, stop run and reverse. Only a little one, tiny stop run. So it may not work because, like I said, it's a bit of a tricky time of day to be doing this. And we have CPI later, which is going to be the big mover, or a nice injector, a catalyst. But yeah, let's have a look at Skylar's stats. You were doing really well last time. I just said be a little bit more consistent, but you were smashing it. So let's have a look. Okay, so from last time, I think that you were 61%, right? So that has leveled off a bit, perfectly normal. But your average win, average loss, and profit factor still smashing. Does this include the entirety of trading? Yeah. Okay. Yeah, that looks, on these numbers, looks fine. Let's have a look. Hold times. Okay, so most of your hold times are falling. The winners fall within 1 to 2 hours. Really good. I like that you finally have a losing day, so we can see how you behave on your losing days as well. But yeah, that's excellent trading. So let's just explore how your position management is now happening. Okay, trading M&Q, that's good. Still. Like, so here's a question. These 1, then 10, I can't tell easily from here whether they are adding on to positions, scaling out, scaling in. So let me know just so I can be a little bit more analytical. Yeah, but 56% and 1.8 profit factor. That's great, right? Because somebody would say, but it's not 75 or 80. Hey, if you have positive risk reward, you don't need 75, 80%. And I would argue that it's actually a better way to trade. It's less stressful. Whenever I'm making my algos, I never go for the super high accuracy ones because they always suck at some point. And you have to like really be careful with entries, and they're super sensitive on anything that wasn't executed perfectly upon a signal, which is never going to happen perfectly in the live environment because you have slippage, you have order matching, you have spreads, you have a ton of things that happens, and you will never get a perfect fill. So yeah. Chad Farmer is an interesting question. Never, but he wasn't very nice. He did do a lot of looking because we were meant to wear black dresses, and he does, he likes the female form, so we usually get a couple of sort of scans. But he was very respectful. He was very respectful. He didn't. He was rude in different ways, but not in the way like that, right? He wasn't. He wasn't like that. And also because Pam used to come to the gigs, and she was pregnant at the time when they were together, so he wasn't allowed even to look. But yeah, rehearsals were a little bit funny because yeah, he was respectful though. I'm gonna put that out there. Very, very respectful when we were working together. Just a few looks, but hey, who doesn't look, right? That's all right. He's a dude. Paul H says, Jade trade on 50 minutes and GC also close to GEX. Yeah, I see that. Let's see if copper can follow that, because the little reversal in gold sometimes, not always, can help copper. They're not really correlating that much today, so I'm just looking at the correlation coefficient, and it's like 0. Slightly negative actually, but yes, it's not too relevant at the moment. So we'll see. Like I said, bit of a weird time of day. Yeah, so Skylar just still a little inconsistent, I would say, on the I think some of these are scale outs, right? So maybe you entered with 10. Let me just see how this relates. So maybe you entered at 10, 716, and then scale out, scale out, scale out. Is that what's happening here? Scaling out, scaling out, scaling out. So let's find some of the new periods. Some flipping and flopping. So this probably won't be a scale out, but it will be a new position initiated. Again, 15 lots. I don't know why, the reason for such a big change between positions. You know, 1, 1, 1, 1, 1, then there's 10, then there's 3, there's 2. So if they're not scale in, scale outs, even though you're trading micros, same thing applies. You need to have the maximum default position size, but you also have to have just an overall default position size. So let's say it's 10. If you're planning to scale in, you can go less than 10 with the intention to scale up, but probably not to 100%. But if you are aiming to scale out, then you start with, let's say, a full position size, and then you scale out. So that's fine. So you start with 10, scaling out. But whenever I start seeing people who are like, one time they're in with 10, they're in with 15, then they're in with 8, then they're in with 5 because things start not going so well, it really introduces an enormous amount of inconsistency, and it makes me think. And some people are like, well, my stops is ATR scale. ATR doesn't change that much. Like if you are looking at it by session rather than intraday, you will find that it's pretty even when it comes to the volatility, because it should be based on like VIX almost, right? And VIX, you're not going to be looking at it on a tick by tick basis, right? Candle by candle. You just see what the VIX is, and then you kind of decide what the range is, because you can actually tell what the range will be pretty well from VIX numbers. Let's have a look at the losing day, because that can always uncover more. Okay, so one thing I'm not liking here. Full NQ, size 10. Why? You know, having an overall balance of 25,000 is not enough of a profit buffer to be trading 10 full NQ contracts. Was this a mistake? You really should be having at least 100K to trade 10 lots. And even then, I would argue maybe 250K for prop. But yeah. So obviously close to full port, right? And then it went wrong immediately, put you on tilt. But you stopped. You managed to stop, right? And on this day, I don't know what was happening there. So micros first, now a full NQ, then micros, then a lot of, again, changes. So just tighten up that position sizing and stick away from full NQ until you have at least like 50K for a balance. And then maybe you can do one NQ, maybe two. I use a value at risk. I'm not going to go through it now. I do have an older video that still applies on my channel, which is on underneath this video. Topstep put my actual YouTube channel there. So have a look for value at risk, VAR. And it shows you how the hedge funds are calculating the maximum risk that this particular product can take on the day. They basically take the biggest days in a period, so 3 months, 6 months, 9 months, and then they say, well, in this period, what was the biggest day and what was the percentage of that day? And usually for NQ, it's going to be somewhere between 3 and 5%. And then they go without any optimizations or any kind of strategies. If we went in on any price and the market went against us for the full maximum 5% or whatever that number is, what sort of risk would we need? What sort of account balance would we need to handle that risk on one contract? What would be the maximum loss? That is the account balance that you need to at least start with, okay? At least to start with. And once you start seeing it from that point of view, you will see how ludicrous it is when people are doing like 10 NQ contracts on a 20K balance. It's an insane amount of risk, So you're still doing well and you stopped on that day, but just be so careful, especially now, you know, you are eligible for a payout. Just be more risk-minded, because, you know, you are obviously able to see the market fairly well. But yeah, just position sizing, I think, remains the issue here. So work on that. But yeah. Pretty good going. So well done. That's what we want to see, right? Just certain things that are still slightly tricky from what I'm seeing. LM says, will you trade the CPI news? Not into it, but I will trade the aftermath. Aftermath? What is that? The way I like to approach any news that could be of high significance in my life is to wait for the news to do its thing. Then I wait for usually about 4 to 15 minutes, depends on how much algo freak out we had during the news. And then I like to see whether there's a committed playbook or a trending move or something that I can just jump on. Whether it's a trending move, whether it's a CPI in reverse, I don't know. So we'll have to see what the number is. Yesterday it was a trending move from the PPI. But yeah. Bruno is actually pointing out that that would mean for a 50K account size, meaning balance, it would be maximum 3 M and Q. 3 M and Q. That's what you would be working with. And remember that also 150K account is not 150K, it's a 4,500 maximum loss limit. So that's your account size. So what would be the size of the trade if it goes against you? What would the size of the account need to be if we had the worst day and you held it through the entirety of the day? That is what the VAR calculation is. And it's a great way to look at risk. So, and most of you probably never even heard about VAR. So yeah, you're welcome. Yeah, this tape is like super slow now. So yeah, they're waiting for CPI. Like you get one little move and then they're like, yeah, actually let's go have a smoke, you know. Chill out before the CPI. What's the time? Right, we've got about 10 minutes left. If you guys have any more questions, let's hear them. But yeah, I'm gonna allow this trade to see if we can at least grab a few takes, right? Grab a few takes maybe to the middle. Usually this setup that banks on the overnight takeout and a reversal, it has a good chance of going at least 75% through the Asia range, but that number is based on the time zone when LME is also trading, so slightly different. Don't know how good those stats are for this time of day on copper. So yeah, but looking forward to next week when we're going to be starting everything at 11. I'm as the intro, so I gave it to them all yesterday, so we'll see. I didn't specify a part of the song that they should do, so it's a song that I wrote 12, 13 years ago. It was actually right before I went into prop trading for real, like professionally. And it was never released, so I'm the sole songwriter and everything, so there's not going to be any copyright issues or anything. And I figured it would be a perfect song to have for the new rebranded D show. So yeah, you'll find out everything, hopefully, next week if we can get all the assets finished. But yeah, new time zone. Yay! Daniel Mossy says, VAR, what is that? Well, I just spent like 5 minutes explaining it. So I'm guessing you are maybe joined late, but yeah. So ahead of CPI, you can sometimes see these unwinding moves. I don't know how that's going to run with the settlement and the, sorry, not settlement, rollover, the contract rollover that we are in right now. But usually on normal sort of releases where you don't have the rollover happening, you can get the unwinding move. I'm not seeing that in any equity. Somebody's saying NQ is dripping. I don't think so. You have GEX 2 that's about to hit at 23,900. So I don't really see anything there for a short just yet. All right, Danny says, no, I was asking what you said. VAR, yeah, VAR, value at risk is what it is. So I'm saying I'm new in trading, I need help. I'm probably not the best person for complete beginners, I will be very honest. Poi says, just search this channel for VAR, it comes right at the top, yeah. So yeah. And the reason why I say that is because I think I have a little bit of expert blindness at this point, where I think something should be just a skill that a trader has, right? And then when a complete newbie comes to me, I completely forget that maybe they don't know how to properly read price action. And I'm like, yeah, just make sure the open sentiment matches this and matches that. And to me, that's like a normal thing. And they're like, what? are you talking about, Dee? And I go, well, you know, the playbook, the failed auction, when you're looking for a strong reversal. And then I get the question, well, what is a strong reversal? And I'm like, okay. I need to roll back my brain quite a few decades. So yeah, this is why I say I'm probably not the best one for beginners. But there are excellent free resources. Please don't go paying anyone to teach you what a candlestick is and how to read a bullish and bearish engulfing, because that's just nonsense. Google it. And there was like Baby Pip's school back in the day. I don't know whether they're still around. That was a pretty good resource for anything newbie related, right? They teach you all the basic indicators. And even though you may not end up using those indicators later on, it's a great starting point. They teach you about candlestick patterns. They teach you about, market structure. Look at Wyckoff. Wyckoff is probably where I would point the newbie to. So learn price action patterns, not necessarily chart patterns, but price action patterns, 2 and 3 bar reversals. So that's where I would start. But I'm not someone who's going to hold your hand whilst you learn the basics. So I'm here when you get to a certain stage and you're still sort of struggling and you want to crack the situational awareness. That is when I can help you with some more fancy tools to get the situational awareness in a very realistic way and staying in a systematic framework so that your workflow every day is the same levels that are proven to have a high accuracy and probability of working, just as a level, not as like, oh, Dee said go long here. No, just as a level in a particular situation. We know, like, for example, in a trending market, just to put it out there, we know that certain 50-day moving averages can be supportive upon a retest, right? That is not something that I'm giving out because this is all for, obviously, educational purposes, but that is a fact. When you go back, that is one of the major strategies that some of the portfolios have in them. Why? Because it's a good strategy, because it works. Whether you as an intraday trader fumble that entry, that's your results, but it doesn't minimize the fact that the 50 daily moving average is a working strategy and a good indicator of whether you're still in the uptrend or a downtrend, right? How you behave in a position is down to your life experience, down to your existing previous psychological traumas of losing money and doing stupid things, muppety things. But yeah, stats are stats, like the numbers don't lie. And then we can go down the rabbit hole of, well, if there was a huge wick through it, but then we reclaimed the level, does that still mean the level worked? Well, what happened after? You have to use some hindsight capital at that point. If it went up, then yes, it still worked. Just because you couldn't get in on it because your account size was big enough to handle the whipsaw, that's not the market's problem, right? It's the problem of your account balance and maybe stop sizes that weren't appropriate. Maybe you didn't see the VIX that was, maybe too big and you didn't accommodate for the bigger stops. Things like that. There is a lot of parts, moving parts. It's not rocket science. I always say it's not rocket science. But it definitely is something to consider with the amount of things you need to remember and recall all in one go before you execute a trade. And that's where people trip up. So it's important to develop some very good habits from the very beginning and, not trade with big size until you have proof of concept, not trade like a lunatic and gambler. I actually had to tell off my Cursor AI because I use Cursor to like automate stuff. Because once I have the shell of the working bots and stuff, the worst thing you can do is then to sit there losing your eyes creating another one. So I use that as a shell, and then it started to go a little bit crazy. I think it kind of lost context because it's got like a max context amount that it can take, and it started giving me a whole bunch of like gambling things. It's like, Kelly Criterion. And I was like, what are you doing? So I told off my AI. I told it that it is a degen gambler. When it basically tweaked the strategy that was working perfectly fine, because I said run the stats for this and give me suggestions for maybe some improvement. And that means use machine learning to use value A to value B to reiterate through all the numbers so that we can see which is the most optimal. It's a little bit of an overfit, but then obviously there's the out of sample testing, which means basically running it in the live or sim live environment to see how it all operates. Then you tweak more, you compare the two, and then you find the sweet spot. But the starting point for any algorithm has to be some numbers that sort of work. So then I had a working strategy. So all I wanted is for it to tell me the sweet spot of, where it should be taking profits and stuff. And it goes, well, if we release the volume filter and we release this, well, now you get 1 million trades. And if you use Kelly criterion, which is basically 25% of the account size, it's insane about risk. So I was like, you're a degen gambler? What is going on with you? You've just given me a strategy that has less profit with more trades and a bigger risk. Sort yourself out. And and it came back with, it's quite funny actually, it does make me laugh. The AI came back with, oh, I'm sorry, you're right. I was totally going down the route of gambling. Let me rerun that again and maintain the P&L and maintain the stats. I was like, oh yeah, awesome. We now have AI gambling. It's interesting. But yeah. All right, guys. So let's get rid of this for a whole 6 ticks because it's the end. Now this is with commissions, right? So eats up the commissions. But yeah, we're coming to the end of the stream, and I want to get back to my algorithms. I don't want any active trades that are clashing with the things that I'm actually working on. But hey, we grabbed 6 ticks, guys. We grabbed 6 ticks. I will wait until after CPI to do any proper trading. In the meantime, have a good day. So watch the CPI. Don't go full porting into it. Obviously, give it maybe a couple of minutes for the algorithms to shake it out. Copper seems to have pretty smooth trades if there is a meaningful difference in the CPI. So it is a great product to trade. And if you're going to look for copper to move on any day, it will be the PPI CPI week. So yeah. That's it for me. This is the final Euro trade show in this time slot. So super exciting. Then from next week, if everything goes well, we will have the brand new LME focused show with new theme tune, which I never really had, did I? Yeah, we can continue to then trade together at the time of day when these products actually do move committedly nearly every single day. Until then, enjoy the rest of your day. I won't be seeing you on the main broadcast until next week. This was the Euro Show in the old time slot. I'm Marcus Soka D. Have a great rest of your day. Take care.